So I love Australia, but I don't like our energy policy, and particularly with respect to nuclear power and in some states in particular, this one around uranium. So back in 2018, thinking that it would be a good idea to get involved in uranium, we looked straight to the US, and so we targeted originally Utah, but then have spent most of our time in Wyoming, and our key focus is our Lohuma project, and that's what I'll focus on today. So I'm not providing financial advice, obviously, and there will be some forward-looking statements, so please consider the disclaimer. I think I've touched on some of these things, but we've got 100% ownership of our projects. I spoke about Lohuma. We have a resource there of 8.57 million pounds at the moment. There's 32% of that is indicated. We've completed an interim scoping study. I will touch on that a little bit more in a minute, but it's an interim study on a resource that we think is viable at this size, but obviously we'd like it to be larger. We did the study for two reasons. One is obviously to make sure that we were on the right track in terms of being able to put together something that was economic, and also to guide the next stage of exploration, which is what we're about to embark upon this year. We're right next door to Cameco's Smith Ranch, which is the largest permitted production facility in the United States for ISR, about 10 miles away, so we're in the same geological setting. There's 7 permitted facilities in Wyoming within about 100 miles, so they've been doing it there since 1970, ISR that is, various forms of other uranium mining as well. We've just recently taken in around 10% of, sold 10% of our equity to Snow Lake, which is a NASDAQ listed company who owns half of the project immediately abutting us to the north. So as I said, we'll be into resource expansion and infill drilling this year. But before I get into the project, I want to provide just a little bit of background on the US and underline why we're there. Many of you are probably aware President Trump declared a national energy emergency in January of this year. And the key focus of that energy emergency is, one, they understand that the grid is struggling to keep up with demand, but also that the demand growth for electricity in the US for the first time in many decades is growing really significantly. And so the executive orders that he put in place are now working their way through the system, and so we're seeing a response to those orders on the ground. We're seeing a pickup in speed for permitting and a focus on getting uranium out of the ground, in addition to obviously all other aspects of the nuclear fuel supply chain. So the environment prior to President Trump coming in was positive, and it's fair to say that there's strong bipartisan support in the US for nuclear power. What the Trump administration have brought to that is a focus on the extraction of uranium and also the development of nuclear fuel. So it is an incredibly positive environment at the moment. Look, there's a lot of detail there, I won't go through it, but I thought it's worth looking at Texas as a state on its own, and Texas has a fairly independent grid in the US. These are some of the projections for demand growth for power. The black bars along the bottom are their projections for data centre growth. And just to put it in perspective, by 2030, they're projecting 86 or thereabouts gigawatts of electricity for data centres on their own. The current nuclear power generation capacity in the US is around 94 gigawatts, and that's 20% of their electricity. And that's just Texas, and Texas is not the largest data centre state in the US by any means. So I just wanted to give you a snapshot, break it down to one state to show how big the demand growth is going to be. Even if it only gets halfway to that, it's still a massive increase in the demand for electricity, and I don't think we can underestimate that. And that's not just an American phenomena, it's actually a global phenomena. So to respond to that, there will be all of the above. Definitely coal, definitely gas, and gas, particularly in the US, the Permian Basin is one of the largest gas reservoirs in the world. A lot of stranded gas there. The people who are trying to generate electrons will look to those sources, but nuclear is very much a part of the conversation and being supported actively. And so that's, all adds to the reason why we're there. And this chart underlines that the US currently uses, now I've got 50 million pounds, it's arguably 47 million pounds of demand a year. That's across civilian nuclear, there's a bit of military in there, and of course, depending on how you factor in secondary demand from the likes of the SPUT, physical uranium fund. And at the moment, they're on track to break through that 1 million pounds a year, but as you can see, it's a huge gap. And with the climate of reshoring and the strategic shoring up of the network in the US and energy suppliers in general, that's the opportunity for us. We don't need to answer, we're not trying to answer all of that, obviously, we're just trying to be one little piece of that. And so that's President Trump saying he wants to quadruple nuclear power. It's a very, very ambitious target to do that, but it's certainly directionally pretty helpful to what we're doing. So, quick snapshot of the company. We've been at it in the US since 2019. I think I talked about Utah before. We've got some interesting projects down there. We moved into the Great Divide Basin in Wyoming, and there's quite significant projects there, and I'll show you those. But our focus in the last few years has been on our Powder River Basin, Low Herma, where we started off with a big historical data set, and we've been able to develop resources from that and then continue to explore beyond that to get to the point we're at the moment. And we broke our projects down into these blocks just for ease of communication, but our focus very much is on that Low Herma project, which is the most advanced project we have. Just to summarise resources, we've got 10 million pounds, 10.2 million pounds in total resources at the moment. Most of that is in the Low Herma project, of which 32% is in the indicated category. There's a fairly significant exploration target there on top of that of up to an additional 20 million pounds across our project portfolio. We've recently done a reconstruction of capital. We changed our name. We were GTI Energy up until the end of August, so we thought we'd make it a bit more obvious as to what we're up to. We've got 107 million shares on issue, just raised $4.5 million, and as I said, Snow Lake Energy just came in for a chunk of that and now hold just short of 10% on the register. We've got some listed options there, 36 million. They've got a strike on them of 40 cents out to September 2028. Just to touch briefly on our board, Simon Williamson, who's up there on the list, he was General Manager of Cameco here in Australia up until about a year ago. Matt Hartman, he's based in Denver, Colorado. He's an ISR specialist and a hydrologist, having worked on a number of the ISR projects around us in the US. And Jim Boffman, he ran High Plains Uranium back in, I think, 2006, and it was sold to Uranium One for $60 million. So they're just some of the notable people on the board. So the map here shows, you can see the AMU projects immediately to the east of the project further up the chart. That's the Powder River Basin in that top right-hand corner. Down in this bottom left corner is what we call the Great Divide Basin. It's sometimes called the Red Desert. And then that Gas Hills project up there from Encore is also an area up there that's been very productive. And down just below Casper is the Shirley Basin. It's also a productive area. So it's a very fertile environment. There's a lot of active projects going on. Lost Creek down here in the bottom left-hand corner is producing at the moment. They're currently building that Shirley Basin project over by Casper, and I was out there last week. They're pouring concrete and drilling holes in the ground. It's around about £8 million project. And they're going to truck resin beads from the Iron Exchange back to Lost Creek, which is around 32 miles. So that's the way these projects typically have evolved in the past. They do in Australia and other parts of the world as well, where you'll have a central processing plant with a deposit, and then in order to keep that plant going, you go and develop a satellite project and bring the resin beads back to the plant. And I guess in the case of Four Mile, you can pipe them across the ground in some cases if it's close enough. If it's further away, then they're trucked. So you can see it's a very fertile area. Production plants, Lost Creek's in production. Up the top, UEC's started producing up at Irrigary. And we've got across on the border with South Dakota, we've got Dewey Burdock, which has just been admitted to the Fast 41 list in the States. That's an Encore project. And down in the bottom, Left-hand corner, the Sweetwater Mill, that's owned by UEC. It also been admitted to the FAST-41 for a restart, both as an ISR and a conventional plant. So a lot going on. Just our Lohumba project. The project directly to the north is the Pine Ridge project. It's owned 50-50 by Snow Lake and GUE, and it's Snow Lake that's come in for 10% of our raise. So our trends run to the north into that project area, and that's where we'll be doing our drilling this year, is pushing up to the north to the boundary. So obviously Snow Lake sees something in having some obvious synergies and having a foot in both of these projects going forward. And look, just on the Great Divide Basin, these are all our projects here on the left. We've got the start of a very interesting resource down at Thor, and we've got 1.66 million pounds there, but we've diverted our focus and our expenditure across to the Powder River. We've got a fairly significant ground holding at Green Mountain, got a nice target up there with historical information and some geophysics, but once again, we haven't moved on to drill that because we've focused our activities in the over in the Powder River. And the chart on the right shows the green, which was the old Uranium 1 ground, which is owned by UEC, and the orangey browny bits are the Rio Tinto projects that were acquired recently along with the Sweetwater Mill. And our bits, the yellow bits, are kind of tucked in amongst there. So it's just to give a context on where things are. I think I've covered most of this about the interim scoping study. We ran a study that was based around a central processing plant. We also looked at a satellite option just to illustrate, the avoided capital for building a satellite plant versus a central processing plant. And I think the comment was made before about how many $1 million per pound of annual production. We think we can put up a study that says around 800,000 to £1 million a year for capital of around $60 million. So the CapEx hurdle for these projects is relatively low compared to a lot of other projects. The other defining thing about most of the projects in Wyoming are that they're alkaline leach, not acid leach. It doesn't necessarily mean acid leach is bad and that alkaline's good, it's just that the geology and the depositional model is different, and so the chemistry for the deposit is different. But what has tended to be the case in Wyoming is we've had good consistent geology and relatively simple metallurgy. So the lixiviant tends to be just carbon dioxide, oxygen, basically baking soda. And we may not get as high recoveries as some acid projects, but the groundwater cleanup might be simpler, for instance. So it is a defining characteristic of most of the projects in Wyoming, with the exception of probably the Lance deposit, which is in the northern part of the basin. Look, I think I'll move on from this. Location's key. Obviously, there's a lot of producing projects, a good permitting environment. There's 4 agreement states in the US, Utah, Colorado, Wyoming and Texas, and that tends to be where most of the production has occurred in the past, and they handle permitting at the state level, and it's quite a big benefit in terms of getting things done. I'll touch on the infrastructure. We're exploring to the north of what we've defined as our Mine Unit 1 and Mine Unit 2 this year, and then the second part of our program is to come back and do some infill drilling to bring the confidence of the resource up. We'll also do some hydrogeological work, some further hydro work and some further metallurgical work on the project. Just in terms of infrastructure, the one in the middle, there's roads right up the side of the project and across the project, so we really don't have much to worry about there in terms of road building. We're 35 or 40 minutes away from Casper. Casper's 60,000 people, airports, it's a huge resource town, lots of oil and gas, coal, and of course uranium mining. And we've got electricity right to the boundary, and where we've located our central processing plant is about somewhere between 600 metres and a kilometre away from both a good road and electricity supply. Got a flow chart, nothing fancy in our flow chart, no optimisations. This is what Cameco uses just up the road. We used the same lixiviant mix that they use and got about the right result from that process. Although we need to do more work, it's certainly very encouraging. We do have an estimated timeline, but it is only an interim scoping study, quite early stage, but it suggests we could get into construction in 2028. So just to summarise, the goals for this year: increase the total resource, increase the proportion of indicator resources, metallurgical, hydrogeological studies. We'll do a resource update at the end of this year and early next year, and then hopefully update our scoping study after that. I won't talk about this chart, but it's just to put in perspective that £8 million is not a small resource in the context of the capital required and other projects that are being developed in this area. And so we're at about that size. We think we can make it bigger.